To draw your support trend line, you need to connect your higher low with each other. This is an higher low over here, and this is another higher low. Connection between both of them will give you a support trend line. Now, to draw our resistance trend line, you need to connect your higher highs together. Here is one high, here is another high, and here is another high, here is another high. Connection between this line here will give you your resistance. You're already having a chart, so that's the power of technical analysis. This will help you in order to start plotting those charts. You see, the chart is not really that difficult once you get the information there. To read the trading charts, you need solid knowledge in technical analysis. Technical analysis is a universal language among traders, irrespective of the instruments you trade. If you're a crypto trader, a forex trader, you trade binary option, you trade the stock market, whatever instruments you trade, the knowledge you'll be getting from this particular video will help you in order to analyze the market. Now we'll start from the basic and gradually advance to the professional mode. That way, by the end of the video, you should be able to replicate the same thing on your chart. Okay, so we have three major types of charts, and that is the bar chart, we have the candlestick chart, and we have the line chart. So let's begin with the line chart. The line chart is a straight line connecting the close of each price. This is not the best type of chart to trade with, but it shows you the overall direction of the market. Just like this, you can see this market is actually pushing upward. So basically, that's what you do with the line charts. Now the next type of chart is the bar chart. The bar chart shows you the open, the close, the high, and the low of that particular price. This is not the best type of chart to trade with. The best type of chart is the candlestick chart. So let me switch between the bar chart and the candlestick chart. Here's the candlestick chart. Obviously, you can see the difference is the body. The candlestick chart shows you the open, the close, the high, and the low of the price as well, but it has a body, while the bar chart doesn't have a body. That is it about the trading chart. We've selected the trading chart already, and that is a candlestick chart. So the next thing as we proceed will be to pick a time frame. Now we have 5-minute time frame, we have 1 hour time frame, 4 hour time frame, and we have a daily time frame. So these are just my favorite. That was why I selected this particular time frames here. You should get more than this on your trading platform. So what this has to do with our candlestick here is, if you're on a 1 hour time frame, each of this candle took a whole 1 hour to form. That from the open price to the close price, it took a whole 1 hour to completely form. And if we switch to a 5-minute time frame, each of the candles you'll be getting took 5 minutes to form. If we switch to a daily time frame, each of these candles you're seeing here took a full day. Okay, so let me highlight the last candle here. You see this candle now is showing as a single candle on this particular place. If we switch to a 5-minute time frame, that's a lower time frame, you can see a lot of information. This was all that happened in that same candle. If you actually missed a trade and probably you're busy and you couldn't trade that particular day, what you need to do is to just come down to this particular tab here. See this tab under here, that represents the date of that particular trading session, right? This represents the date. So we have the 4th November, we have 5th, we have 6th, 7th, 8th, 11th, 12th, and all that. If you want to know what happened on the 5th of November, probably you're busy and you couldn't trade that day, and you want to know what happened on that day, just come here and highlight on the 5th to on the, let's go to on 6th. So this was on 6th November. So everything that happened here happened on the 5th to 6th of November. This thing would be this tab over here. This represents the price. So we have 1.29234 as the ask price, and we have 1.29156. So this is a particular price that particular currency is trading at the moment. And if you check this other tab here, we have the sell and we have the buy. Now we are on the GBP USD chart. This, you can actually use this on any chart, right? So we have the sell here and we have the buy here. On the GBP USD chart, the moment you click the buy button, you're automatically buying the Great Britain pound and you've automatically sold United States dollar. That is what this simply means. You know, this is a currency pair, and for you to buy one currency, you need to exchange one of the currency with the second currency. So that is all about the interface. The next thing will be to identify the trend. Okay, for you to read the trading chart, you need to identify the trend. So let's quickly clean all this. To identify a trading trend, you need to know the difference between higher high, higher low, lower high, and lower low. So let's begin with this. Price was actually pushing upward, right? This was an uptrend, this is a downtrend, this is an uptrend, this is a downtrend, and this is another uptrend. But the overall direction of this market was a uptrend, right? You can compare this price here. This price here was lower compared to this particular price here. So the overall direction of this market is a uptrend, right? So it's an uptrend when it's trending upward, and it's a downtrend when it's trending downward. So if we have a low over here, we have a high. Okay, we have a low over here, we have a high. Here we have a low over here, we have another high here. This is another high here. So basically what this simply means is this would be a low, right? If this is a low, this is a low, right? These places are lower than this particular places here. Okay, these ones are highlighted here, they are higher than these ones over here. Okay, so this will consider this as the low of the particular market, and this will be considered as the high of the market. This low here is higher than this particular low. If you compare this is higher than this particular place where this one stopped here. This is higher than this place, so it's considered higher low, and this will be another higher low. This low here is higher than this particular low here, so that's why we call it higher low and higher high. Okay, now for the higher high here, this high here is higher than this particular high over here, so that's why we call it higher high. And this other high also is higher than this high here, so that's why we call this another higher high. And here is another high, and it's higher than this particular high over here. So that's how we get the higher high and the lower high. Now let's check for a downtrend. Okay, have this touch here, we have this touch here, we have this touch here, we have another touch here. Okay, another touch here, and here is another touch over here, here is another touch over here. We have this, we have this, we have this particular high here, right? We had another high here because this market is actually trending downward. Can you see this movement is actually on a downward trend? So we had this high over here, and this will be the low, right? Price actually dropped from this place down to this place, and immediately got to this place, the buyers pushed price down up to this place, and the sellers pushed the price again to this particular zone here, and buyer took over and pushed it here. So it's a constant battle between the buyer and the seller. So you want to be where the buyer at, and you want to be where the sellers at. That way you'll be able to make money with the trend in the market. So here is the high, and here would be a lower high, because all these here are highs, right? Because this is a high, this is a high, this is a high, this is a high, this is a low, this is another low, this is another low, and this is another low over here. So this will be a high, and this will be a lower high, because this high here is lower than this high over here. So this will be a lower high, and this will be another lower high, because this high here is lower than this, and this will be another lower high, right? Now for the low, okay, we have this low here, and this is a low, this is a low, and this is a low. So we call this a lower low because this particular low is lower than this low over here. This low here is lower than this low over here, so we call this a lower low as well, and we call this a lower low as well. So what you just need to take out of this is when the market is trending upward, it's moving in series of higher high and higher low. When it's trending downward, it's moving in series of lower high and lower low. So the next thing will be to identify your support and your resistance. Okay, identify your key support and your resistance. So let's come back to this uptrend over here. So we've gotten this information that the market is actually trending upward. To draw your support trend line, you need to connect your higher low with each other. This is an higher low over here, and this is another higher low over here. So we are connecting the both higher low. The connection between both of them will give you a support trend line. So we have our support trend line here, just like this. Now to draw our resistance trend line, you need to connect your higher highs together. So here is one high, here is another high, and here is another high, here is another high. So connection between this line here will give you your resistance. So you're already having a chart. So that's the power of technical analysis. This will help you in order to start plotting those charts. You see, the chart is not really that difficult once you get the information there. So I think you understand this already. So let's quickly do the same thing on this bearish movement here. And to get your resistance here, you connect your lower highs together. So here we have our lower high. Okay, here we have the lower high connected with each other. Now to get the support trend line here, you need to connect the lower low. So this is the first lower low, this is under lower low, this is under lower low. Now I skipped this particular lower low. There's a reason why I skipped this low over here. That was because when this price dropped from here, there was no touch of resistance. That was why I ignored this particular one and I chose this here. So immediately price dropped down here, it came back and touched this particular resistance trend line. So we are connecting this low with this low here, with this low here, with this low here. So you have this particular up here. So we have our uptrend and we have our downtrend connected already. I think you're getting the information already. The difference between the support and the resistance here is when price goes to the resistance here, there were presence of sellers here and sellers took over the market and pushed price down to the support here. And when it got to the support here, there were more buyers at the support and buyer took advantage of the market and pushed price down to this particular resistance here. And the moment price got to this resistance trend line you've already drawn, sellers were present and they pushed the price down to this particular support trend line again. So you're seeing how this connects with each other. Once you are able to draw this trend line, what you need to do is just to wait for price to get to your trend line. You already know that on this trend line there's a chance that the buyer are going to take over the market, and that was the same thing that happened here. Now look at this. When price got to this particular support trend line here, price broke out of this trend line. So you don't trade this blindly, don't just jump into it, and I'm going to explain why you don't jump into this and in a minute. Okay, that will be the next part we are going into. So price actually dropped out of this particular place here. We have this support over here. This is a support. Let's quickly draw this is a support here, because this was a resistance, right? So this will be our structure support and this is structure support. Okay, now what happened here is when price actually pushed down here, price came out and broke out of this particular resistance here. So this resistance became the support. Now this was supposed to be our resistance. This particular yellow line here was supposed to be our resistance, but it has changed to a support because price has already broken out of the resistance and now it's already a support. So this price came back here and retested on this particular zone, this zone here where we had this touch. So price came back and retested on the particular zone before we add this push upward in this direction here. So the moment price got to this resistance again, price pushed downward in this direction and came back to this support. Now what happened here is price broke out of this particular support here, and price continued moving downward just like this. Now two things can happen in this particular scenario here. It's either price retest this zone here just like this. Let me quickly mark that out. It's either this price do something like this, like does this consolidation already. It can only result to two things. It's either it continue downward like this, or price come up and breaks out like this, and we have this movement upward. Now when we have a push upward like this, you need to be mindful because we have a resistance here. Okay, we have a resistance here already, so you need to be careful because the moment price gets to this particular resistance, two things can happen also. So this will be our resistance here, so this will be a support already, right? The moment price breaks back to this place, this will change to a support. So you can see this actually changes depending on where the price is at the moment. So two things can happen if price gets to this particular uh, zone here. So it's either price starts to consolidate, this kind of consolidation. Look, we had the consolidation here before price actually pushed down here. So that was a battle between the buyers and the seller. So the seller eventually won the market. That was why they pushed the price down here. So you should expect some level of consolidation here, and eventually the sellers win the market. Price will come back and continue downward like this. Okay, so if price eventually breaks out of this place, you should expect price to pull back to this particular zone here. So you come back and retest this particular zone here. This was our resistance initially, but the moment price broke out of the resistance, it will become a support. Now price is doing this because it wants to grab liquidity. Okay, so here is where most people will be waiting to get into the market, so that way you'll be able to set your stop loss and set your take profit. Once price gets to this place, you should actually go ahead and get into the market. Okay, now that's where we need the candlestick patterns. I said I'm going to explain the candlestick in an upcoming video. For you to get an entry here, you need to know what the candlestick are actually telling you. So let's quickly proceed. There are two stages in the market. Price will either be in a consolidating state or in a trending state. But let's start with the consolidation. So this is our support over here. This particular little line here is our support, and this is our resistance. So once you start having movement in this direction, price come to your resistance and it sold back to the support, and it came back to resistance and it sold to support, and it bought to resistance and it sold to support. Once you begin to get this type of movement, market is already consolidating. Now here is what you need to do. The moment price gets to the support, just go ahead, right? And that's how you trade the consolidation, right? When price gets to the support, go ahead and place a trade on your support. Just place a trade on your support. Put your stop loss below the consolidation and put your take profit on the previous resistance. Okay, now here is what you should expect the market to do. The moment price gets to this support here, once you get an entry, the price should push upward to this particular resistance here, and you are out of the trade. You take your profit and leave the trade. Now once price gets to this resistance again, once the price gets to this resistance, what you need to do is to go ahead and take an entry for a sell. Okay, so just place an entry for a sell and put your stop loss above the consolidation, then put your take profit on the support here, right? So this is what you should expect the market to do. Market should drop down to your support, and the moment price gets to the support, take profit ASAP. Okay, now for the trending market, if price eventually breaks out of this your support here, now here's what you need to expect. Then price should pull back to this particular resistance here. Remember, this resistance is already becoming support, so price should push back to this resistance here, and that's when you begin to have this type of movement in the market. So this will be the trending market. Okay, so that's when you should expect this type of movement in the market. So to draw your trending market, you already know that you just need to come here and draw a straight line connecting this your trending market here. That's this will be a support trend line, and to draw your resistance trend line, you come here and draw the resistance trend line touching all the higher highs together. To place a trade on this trend here, that's when the market is actually trending upward. All you need to do is to just wait for price to get to the support you've already drawn. Wait for price to get to the support you've already drawn and get an entry there. Put a stop loss below this part here, and the moment price gets to your resistance, that's the resistance you drew, take profit immediately. Price gets to this resistance over here. Okay, and this as well. The moment price gets to this particular place here, you can add another entry and get another entry again. Put a stop loss here, and when price gets to this resistance here, take profit there. Now there are two ways you can actually trade this. Either you trade it in this manner, or you come here and the moment you start getting this your entry, if you get an entry on this particular retest here, just place a buy there and put your stop loss below this buy here, and wait for price to break out of this your movement here. You see this is a structure already, so you can just wait for price to break out of this structure before you exit the market. Okay, that way you'll be able to make more profits. Now let's say price is actually consolidating just like this. Boom, boom, and eventually price breaks out of this particular zone here. You automatically know that okay, price has broken out of the consolidation and you should expect the bearish trend because it broke in the bearish manner. So what you need to do is to expect price to come back to this place and you get an entry the moment price gets to this particular zone here, right? So to plot your chart, just come here and draw a trend line connecting these together. Okay, now expect the market to drop down just like this. Now if you miss this particular entry, expect price to come down here, and the moment price gets to this place, go ahead and take your sell, right? Get your entry and put your stop loss above this place, and wait for price to get to this support trend line. So this will be our support trend line. So wait for price to drop to the support trend line before you take profit. Once price gets to your support trend line, go ahead and take profit. So this will be your take profit. So you should exit the market. And if you choose to stay and hold the market as well, just the same way I showed you a scenario here where you are actually holding the market for more profit, you just hold on and expect price to move to this place, and because price might actually continue moving downwards. So if you get an entry here, if you want to hold the market, let's say you got an entry in this particular place here and you decide to hold the market for long, here is how you trade that. Just come here, place an entry, and you keep managing the trade until price eventually breaks out of this particular trend, just like this. Let me draw that. Until price eventually breaks out of this trend line, just like this, that's when you exit the market. So if once price break out of this your trend, then you can exit the market, so that way you can actually bank more profit. So for this buy here, price might actually continue moving downward here and stop you out. If you jump into a trade the moment price get to this place, price can actually come down here and stop you out before it begins to move upward, right? So you've already lost this money if you have jumped into the trade and you are risking this little. This red place is what you are risking. So if you're risking this little, price has already stopped you out, and that's a loss for you before the market eventually starts moving upward. So you need the next video, that will be the candlestick, how to read candlestick. That will help you to know the right candlestick you're expecting when price gets to this place. That's where strategy comes to play. So different traders use candlestick in different manner depending on your strategy, but the knowledge you have with the candlestick will help you in order to form a strategy. As we proceed in this course, there's a point where we'll be creating a strategy, and we'll create the strategy live just like this. I'll be creating a strategy with you guys, so that way you know everything about the strategy. In case the strategy starts misbehaving, you know how to tweak the strategy and you continue making profit from that particular strategy. Okay, so I got you covered in all these stuffs here. But you say we can't take someone from primary school to tertiary institution. It's a gradual step. Okay, if there's any question you have, just go to the comment section and drop your questions there, and I will go ahead and answer the questions I can respond to. And I hope you gained value from this video. If you gained value, don't forget to hit the like button. And if you are new into forex trading and you need a course There's an ongoing forex course at the moment. It's totally free. So just check out the playlist, check for the stage you are at the moment, and join the course. By the end of the course, you should start making decent profit in the financial market. And that will be all for now. Until next time, happy trading, guys. Cheers.